Krystal CPA here, and in today's video, I'm going to share with you how you can write off all, or at least most, of your vehicle expenses. First things first, you should probably know that the absolute best way to write off all of your vehicle expenses is by having a business you can write it off through. The IRS offers a ton of deductions to business owners who use their vehicle for business purposes. But if you don't have a business, I'll also share some ways on how you can write off vehicle expenses as an individual taxpayer. If all of that sounds good to you, please help me out and like this video, and let's get started. There are two methods for deducting your vehicle expenses if you're a business owner who uses your vehicle for business purposes: the actual expense method and the standard mileage method. As the name suggests, the actual expense method allows you to deduct all of the expenses related to the operation of the vehicle. The expenses you can deduct under the actual expense method are gas, tires, repairs and maintenance, insurance, registration fees, depreciation, lease payments, vehicle loan interest, and tolls and parking fees. This represents nearly all of the expenses you would have when you own a vehicle. Now, there is an exception to the actual expense rule you must know about. If you own only one vehicle, chances are you also use that vehicle for personal purposes, like going to the grocery store or picking up your kids, etc. In that case, you can only write off the business use of that vehicle. For example, if you use your car 60% of the time for business, you can only write off 60% of your actual vehicle expenses, meaning 60% of the insurance, 60% of the gas, 60% of the repairs, and so on. To figure out the business use rate of your vehicle, you would need to keep track of your business miles and the total miles you drive throughout the year. You can use a manual logbook every time you drive for business, or you can even plan ahead and put your business destination in Google Maps and see how many miles you'll drive and record the miles that way. Or you can use an app like QuickBooks to track your miles from start to finish. And by the end of your trip, you can just categorize the trip. At this point, you might be wondering what car rides qualify as business mileage. Some examples include rides from your office to meet with clients. Your office could also be your home office, by the way. Rides to conferences, rides to scope out investment opportunities or properties, and even rides to conduct business errands like going to the post office to mail shipments, or going to pick up supplies, or going to the bank. Errand type business mileage may not sound significant, but it's definitely worth keeping track of because these miles can easily add up over the course of a year. Now, what doesn't count as business mileage is commuting. Commuting counts as the driving from your home to your office or store. Basically, the daily driving you do to your workplace. Once you know the total business miles you drove in the year, you would simply divide that number by the total driven miles to get your business use percentage, and you would apply that rate to all of your vehicle's operational expenses under the actual expense method. And of course, if you only use your car for business purposes, then you can write off 100% of your vehicle expenses. The other method the IRS allows you to write off your vehicle expenses is with the standard mileage method. Under this method, the IRS determines an annual mileage rate you can write off per business mile driven. For tax year 2021, this mileage rate is 56 cents per business mile. So for every business mile you drive, you can write off 56 cents. For example, if you drove 5,000 business miles during the year, you would multiply 5,000 by 0.56 and your total vehicle deduction would be $2,800. This is a much simpler method to apply because it only requires you to keep track of your business miles. Whereas with the actual expense method requires you to keep track of your business mile plus all of the vehicle operational expenses. But with that said, oftentimes applying the actual expense method could be more beneficial for your taxes, and it could be worth tracking all of your vehicle expenses. So now you have a pretty good idea of how to deduct your car expenses under the two available methods. Now let's talk about how you can write off the cost of your vehicle. Normally, when you purchase any business asset, you have to capitalize the purchase price and take depreciation every year until you recover the cost of the asset. So only a portion of the cost is deductible in the first year. But due to recent legislation, if you are using a newly purchased car primarily for business, you can take a Section 179 deduction. Section 179 allows taxpayers to deduct the entire cost of certain property as an expense when the property is placed in service during the tax year. And this includes the purchase of business vehicles. For example, let's say you purchase a car for $40,000 that you plan on using mostly for business purposes. Under the old way, you would only be able to deduct $8,000 in the year you purchased it. That's because the IRS defines the useful life of a car to be 5 years. So $40,000 divided by 5 years is $8,000 in yearly depreciation. But under Section 179, you can write off the entire $40,000 purchase price the year you bought it, assuming you placed it into service on January 1. If you bought it mid-year, you would only be allowed to write off 50% of the purchase price, and the remainder the following year. To write off your vehicle expenses, you would use Schedule C or your specific business tax return. Usually the line item will say something like car and truck expenses. And to write off the purchase of the vehicle, you need to fill out Form 4562 to figure your Section 179 deduction. Now let's say you're an individual taxpayer and want to write off your vehicle expenses. There are really two main ways to do this. The first involves the purchase of electric or hybrid vehicles. If you purchased this type of vehicle, you're likely eligible for the electric vehicle tax credit, which is currently up to $7,500. This credit directly reduces the amount of taxes you owe during the year. The second way is by a charitable donation. If you have an older car and the cost to fix it would not be worth it, you could consider donating the vehicle to charity. This is opposed to going through the hassle of trying to sell it for very little money. Instead, you can donate it to a qualified charity and receive a tax deduction for its fair market value. Just make sure to get a receipt from the organization that shows the value of the vehicle at the time of donation. Thank you so much for watching this video. Let me know down below if you have any questions or thoughts, and I'll see you in another video.